What if the money you've been saving for retirement could actually help you buy your dream vacation home now without a single penalty? Today, our expert guest is sharing a little known strategy that could help you unlock cash you didn't even realize you had. What if your 401k came with a fire pit and a lake view? That's the question that inspired it all. I'm Katie Klein, and living in New York City meant buying a home felt impossible. So I decided to flip the script and buy my second home first. When I'm not there, it doubles as a short-term rental, covering its costs, building equity, and even turning a profit. And best of all, it gives me a place to vacation for free. What 401k can do that? Every week, join me as we hear from real people who've done the same and experts who can help you do it too. If you thought owning any home, let alone a second one, was out of reach, this is the show for you. This is Second Home First. Hello, everyone, and welcome back to Second Home First. I'm your host, Katie Klein, and we have a really exciting expert episode for you all today. One of the biggest hurdles people face when wanting to invest in a second home, or any home for that matter, is getting the money to fund the purchase. My guest today is Olivia Tati, founder of the Wanderlust Wealth Academy, who's here to share a super creative financing strategy with us. Olivia is a real estate investor who did something most people don't even know is possible. She borrowed against her 401k to purchase her very first investment property. She's here to demystify the ins and outs of using your retirement account as a funding tool, to break down the risks versus the rewards, and to show you exactly how you can take advantage of this little known option to jumpstart your own second home journey. So, without further ado, let's hear from Olivia. But before we do, we're going to take a super quick break for a word from our sponsors. Finding the right cleaning team has been absolutely crucial to the success of my second homes. They're my eyes and ears on the property when I'm not there, spotting issues early, keeping standards high, and helping me wow guests time and again. But finding someone local you actually trust? That wasn't always easy until I found Turno. Turno connects you with vetted cleaners who understand the demands of short term rentals in your specific market. Their app makes everything simple, from auto scheduling your cleans to photo and video checklists that ensure your property looks exactly the way you want, and even automatic payments after each clean is completed. Click the link in the show notes to check out Turno and get $25 off your first cleaning. You finally bought your dream vacation home. Now what? Your goal is for it to pay for itself, but between managing bookings, guest messages, and cleaners, it can feel like a full time job. That's where Logify comes in. Logify is a comprehensive vacation rental platform that makes it easy to manage and market your second home, even if you're just getting started. From syncing your calendar across Airbnb, Vrbo, and Booking.com to automating payments and guest communication, Logify simplifies it all. It's built for beginners and comes with free one-on-one onboarding to help you get up and running fast. From now until December 4th, Logify is running their big Black Friday sale, offering 65% off their yearly and bi-yearly professional and ultimate plans. Check out the link in the show notes to make your second home start working for you. And now back to the show. Olivia, thank you so much for joining us today.
I'm so excited to be here. Thank you for inviting me.
So let's start at the beginning. What is a 401k?
Yes. So a 401k, especially if you're working corporate, maybe you have one, right? It's a retirement account basically. So you can put money into it so that it grows over time. And then when you're 59 and a half years old or 65 years old, you can take the money out and use it when you retire. So you don't have like income coming in from your corporate job anymore. So instead, you have income coming in from your retirement account.
hmm And I think most people, including myself, assume or assumed before I learned all of this, thanks to you, that you can't touch that money until 59 and a half. Is that not the case?
No, it is not. And this is the thing is, I think a lot of regular financial advisors, your corporate job, they're generally going to err on the side of extra conservative, but I also think that they're not necessarily gonna teach you how to grow your money and other assets and in other ways that could potentially allow you to, like, leave your job or give you more flexibility. So, understandable that they wouldn't teach you that.
Right, right. And okay, so you're saying there is an option that we can cash out our 401k before we're 59 and a half. But what happens if we do that?
Yeah, so there's actually a few different options, right? So the first thing that a lot of people are familiar with is actually cashing out your 401k. Now, this is the one where you do pay penalty and taxes. So you're going to pay a 10% penalty on it, and you're going to take pay taxes on the money that you take out as well. This is actually my least favorite form of using your 401k to invest in real estate or to use it for whatever else you want, because you are paying all these penalties and fees. So let's say you have $50,000 in your 401k, you may only end up with like $30,000. That's not
Mm,
as fun, right?
no, that hurts. That hurts to see that change.
Exactly. That's like, and unless you're very much in a situation where you are gung ho about a specific strategy, like I know a bunch of real estate investors who've quit their corporate jobs and have decided to cash out their 401k and use it to invest in real estate. I personally did not do that. What I did, and this is what a lot of people don't realize, is you can actually take a loan from your 401k. So you can borrow against your 401k. And if you do this, you don't have to pay any penalties or any taxes, and the interest that you're paying on your monthly payment for that loan just goes back into your bank account. It's not like you're paying these random fees to a bank or a financial institution. It's literally just taking a loan from yourself.
Okay, this sounds way too good to be true. So I need you to walk us through the steps because this sounds incredible. Like you said, you're paying it back, but you're paying it back to the bank of you. So that just sounds like a dream.
Completely. And I remember, so when I learned about this, I was buying my first investment property, and I didn't realize that you could take out half of your money, basically. So let's say you had 50,000 at the time. I had $50,000 in my 401k. I could take up to $25,000 out. If you have $100,000, you can take up to $50,000 out. Now, 50,000 is the limit. So even if you have $150,000, you can still only take up to $50,000 out. And this is across the board for all 401ks. I haven't seen one yet where you're allowed to take more out of that for a loan.
Okay.
But the cool thing is then you can invest it in literally anything you want, be it real estate, be it some other stocks, be it a business, whatever you want. And then there are different types of loans depending on your provider that you can take. So the most common one is going to be a 5-year one, but they sometimes have 10-year ones. Sometimes they even have 30-year ones. So I've taken a 401k loan out twice. My very first one that I took out, I actually did a 30-year fixed 401k loan because I was technically buying a primary residence. It was a duplex where I lived on one side and I rented out the other side. But because of that, it was a $25,000 30-year fixed loan. My monthly payment on it was like 100, it still is because I still have that loan, $120 a month, but this property is making over $5,000 a month and the mortgage on it is 2,400. Right? So it's a freaking slam dunk deal, and that was all the money that I needed for closing costs and for my down payment too.
I think this is such a massive unlock because the biggest, I think, hurdle to get into real estate investing or to buy your second home first or even your first home is where do I get the money? So the fact that we might already have the money, but we've been taught, or at least we thought that we can't touch it until we're ready to retire, but yet this exists. This is huge.
Oh, it's so huge, and the thing is that money is yours, right? Like, that money is yours to use, so it's crazy that we have, like, this mentality that you're not supposed to touch it, because at the end of the day, it is yours to touch, it is yours to use accordingly, and I know even for me, when I took mine out, I really weighed out the returns. I looked at how much I'd be making in, like, having it sit in my 401k versus how much I'd be making by, at the time, house hacking, right? By buying that investment property, and the crazy thing is I was able to replace that $25,000 in that account within the first year. So now
Wow.
crazy, crazy.
Yeah, because
And
you said you've now taken a second loan against that
so
401k.
so I took a second loan out of another 401k that I had. So when I quit my corporate job, I rolled most of my old 401k into a new solo 401k. I kept $1,000 cuz and this is where you really want to call up your provider and see what the requirements are because a lot of people will tell you that if you leave your job then you're going to have to pay that 401k loan back right away. Not necessarily. This is why you have to check with your provider. I called them and I was like, "Okay, I'm actually leaving my job. What happens with this?" All I had to do was leave a balance in my 401k. There wasn't even a requirement. I just chose to leave $1,000 because I was like, this seems right. This seems fine. Well, let's just leave $1,000. And I still have that 401k and I'm still just paying $120 into that. And then I rolled the rest of it into a solo 401k so that I could do it again with another property.
We'll be right back after a quick word from our sponsors. If you're listening to the show, I know making memories with family and friends is super important to you. And that's why I'm excited to introduce you to Flightographer. Flightographer connects travelers with local photographers in more than 350 destinations around the world. But it's more than just a photo shoot. It's a way to capture meaningful memories and experience a place through a local's lens. When I look back on past Flightographer photo shoots I've done, I don't just see pictures, but special moments preserved. I remember the feeling of that day and the story behind every shot. Whether you're celebrating a milestone birthday, a family vacation, or a special getaway to your second home, Flightographer is there to capture the moments you never want to forget. To book your own Flightographer shoot, visit the link in the show notes and use code SHF25. That's S as in second, H as in home, F as in first, 25 to get $25 off your first shoot. When I was finally ready to rent out my vacation home, I had no idea what to charge guests. Thankfully, that's when I found Price Labs, a dynamic pricing tool that helps me automate pricing like a pro. It's simple. Price Labs uses real time data to automatically adjust my rates based on local demand, nearby events, and booking trends. It's easy to use, lets me set my own minimum and maximum prices, and keeps my pricing smart and competitive without any manual work. If you want your vacation home to pay for itself or even turn a profit, you need Price Labs to help you get the most from every booking. Visit the link in the show notes and enter code second home first, all one word, for a 30-day free trial plus $10 off your first invoice. Interior design is one of my favorite parts of buying a second home. I love creating a beautiful space. But let's be honest, staying on budget, managing orders, tracking deliveries, and juggling countless retailers can get overwhelming fast, which is why so many hosts turn to Minoan. With Minoan, you can shop more than 180 brands you love all in one place. That's brands like Crate and Barrel, Samsung, Anthropologie, Article, Casper, and so many more. They give you access to better than trade pricing, something typically reserved for professional designers, allowing you to save on every purchase. They keep every order, delivery, and receipt organized in one clean dashboard. And the best part, there's no membership fee, no subscription, no catch, just a streamlined approach with big savings. Once your second home is set up, Minoan can even make it shoppable. Your place basically becomes a four-walled influencer. So after guests spend a weekend obsessing over your couch or those sheets or that coffee maker, they can scan your QR code and order the exact same item for their own home. You earn a commission, no extra work required. To furnish smarter, visit minoan.com/second home to sign up and receive a free $25 in credit. And now back to the show. So let me see if I'm getting these numbers right. You had about 50,000 in your 401k. You borrowed 25,000 from it. That is a monthly payment of $120 for you per month for 30 years. With that $25,000, you were able to buy a duplex, which means you live in one unit, you have renters in the other unit. You said that property is making $5,000 a month and your mortgage is $2,400 a month. So that means you are not only cash flowing, you're making money every month, but you also have a place to live for free.
Yes.
And you said you repaid it in a year.
Yeah.
So by making yourself uncomfortable by touching that money we're not allowed to touch for 1 year, you have given yourself this asset and a roof over your head.
Completely, completely, and that's where like, you have to be willing to get creative and ask questions, right? You cannot just take things prescriptively. Anytime you hear an inkling of, "Well, someone said you could do this. Let me actually look into it. Let me see what's possible," you know?
Yeah, absolutely. And what about that second property that you borrowed the other 401k for?
Yeah, so I did that actually last year because I was like, okay, I had my old 401k sitting. It took me a few months to figure out what I was going to do with it, if I was going to put it into a self-directed IRA or if I was going to put it into a solo 401k. Ended up deciding on a solo 401k. And basically what a solo 401k is, if you're an entrepreneur, you can actually also create a 401k for yourself and still contribute to it too. Because here's the thing, it's not like I don't believe in stocks, I don't believe in 401ks. A lot of, investors or entrepreneurs will say, "Why bother with a 401k?" I like to diversify. I like to get creative and I like to diversify and I like to put money in different places. And so I actually still wanted a solo 401k for myself because there's also other benefits that come with being an entrepreneur and having a solo 401k. And then I just last year bought a house in Colorado and did the same thing where I took out a solo 401k for, I believe it was $30,000. And right now for that, I'm paying a little bit more. It's like, because interest rates are a bit higher, I'm paying about $258 a month, something like that. But the property that I purchased makes $10,000 a month. And so
Wow.
yeah, exactly, exactly, and I did have to put a bit more of my own cash into that, but I was
Yeah.
able to buffer it with the 401k loan.
Right, and it makes sense that your payment has doubled because the equity, the value, it seems, has also doubled.
Yes, exactly, and the interest rate's a little higher too. So, the interest rate will, change based off of what market interest rates are too, but remember, the interest still goes back into your own account.
Right, so if you're paying more interest, you're paying more money back to yourself.
Exactly.
Okay, wow.
It's just your monthly payment is higher.
I also like what you're saying too, because you're not talking about pulling out of our 401ks so that you can go buy a designer handbag or a very expensive pair of shoes. You're talking about taking money out of an investment account to put into another investment. And I think it goes back to what you just said so beautifully about diversifying, putting your eggs in multiple baskets so that you're really covering yourself from your portfolio perspective.
Completely, and it's the whole thing, it's like putting your money to work. Think, Rich Dad, Poor Dad, they talk about, like, how every dollar has to have a job, and if that dollar isn't working as hard as it should be, you wanna go put it to even more work so that it is working as hard as it should be, you know?
Yeah. Well, I mean, I'm sold, and I imagine people listening, watching are probably thinking, yeah, let's definitely do this. So, if someone wants to take a loan against their 401k, what are those immediate next steps that they should take to see if this is possible?
Completely. So step 1, log into your 401k. It's probably with either Fidelity or Vanguard or Empower. There's various providers, but if you don't know, just go ahead, contact your employer, and they will also let you know where it is. You can log in online. That's what I would do first. Log in online, and then you're going to navigate to the loans section. It might say loans, it might say borrow, but that's really what you're looking for. And then they're going to show you a breakdown of the different kinds of loans that they have. They may have 2 options, 3 options, 5 options. That's all gonna depend on what the employer also provides and what the company provides too.
Hmm.
Then you will click on it and it will tell you the interest rate, it will tell you the monthly payment. Usually you can even put in the amount that you wanna take out and it will show you the numbers on what that looks like. And then here's the crazy part, is you literally will put your numbers in and then you click submit. And you can just send it, that is your application essentially, and
This
it's
is blowing my mind that
so
not only
crazy.
this all exists, but it exists on the portal that I've been on a million times, and I just didn't toggle to the right tab.
I know, and it's just because you don't know, right? It's simply lack of, like, knowledge behind it, and within a lot of the times within a day, within maybe 3 to 5 days, you get it approved, and here's the thing too, they're not, like, checking your credit score or anything like that, like, you're literally borrowing money from yourself, right? If you are using it to buy a primary residence, like, let's say you have a 30-year fixed option, then they may just ask for your signed purchase agreement. So you have to be under contract on a property in order to take that out. That was like the only extra step that I had to do. But if you're taking it for, let's say it's for a business, if you want to invest in something else, then a lot of the time you don't have to actually submit any paperwork for that
Mhm.
either.
And your lender, your mortgage lender had no issue with your down payment and your closing costs coming from here?
No, I mean, I told them right off the bat that's what I wanted to do.
Wow. This has been absolutely fantastic. For anyone listening, watching, I want you to know Olivia also wrote a fantastic Substack about this, really breaking down her steps. So I'll be sure to link that in the show notes. Olivia, thank you so much for blowing our minds and joining us today.
No, absolutely. I'm just glad more people are using it. Literally, someone messaged me the other day and they just submitted an offer with a 401k loan. I'm like, amazing. She's going to be able to quit her
Amazing.
job after buying this property. So,
Wow. This is incredible. We are all logging on to Vanguard right now.
yes.
Thanks again.
Thank you.
Thanks for listening to Second Home First. If you liked what you heard today, be sure to sign up for my free weekly newsletter at buyyoursecondhomefirst.com, where I share the simple 4-step strategy to help you do the same. If you have a minute to subscribe, rate, or review the show, or even send a favorite episode to a friend, that would mean the absolute world to me. And if you want to be a guest on the show, have a question you want answered, or a topic you think I should cover, send me a note at hello@buyyoursecondhomefirst.com or on social media at buyyoursecondhomefirst. I personally read and respond to every single message. Once again, I'm your host, Katie Klein, and I can't wait to see you all again next week. The content shared on Second Home First is for educational and informational purposes only. Please consult a licensed financial advisor before making any investment or financial decisions.